homeowners, real estate owners, what do they need to come in, what do they need to keep in mind when it comes to selling a property, when it comes to taxes?
Okay, well, I'm going to cover the primary home side first. You get a $250,000 exemption on capital gain. If you're single, $500,000 if you're married or a surviving spouse. And you got to keep in mind there's the IRS has a 2-year out of 5-year sliding scale rule, meaning those 2 years could come at any point in those 5 years in order to qualify for that exemption. If you happen to sell property that's really appreciated and going over that 250 or 500K gain, then you'll want to probably consider a like kind exchange. And then on the rental property side, you get a favorable gain of 15 to 23% on your net proceeds. And how they determine that is your sale price minus what you pay for the property or cost basis. And then you have your selling expenses. And also, as I discussed earlier, if you have a passive loss that's suspended, that could be taken against that capital gain if you ever decide to dispose or sell that rental property. And then you also want to keep in mind, I've had a lot of clients over this year that they get inherited property. If they inherit a property, let's say, their dad spent 1950, spent $50,000, and then when he passes away in 2020, that property is now worth 200, and then the person that inherits the property sells it for 250. They're only going to experience a $50,000 capital gain because it's going to go by the the basis of the date of death of the decedent. So if you ever happen to have anybody that's inherited property, they want to try to get an appraisal as soon as possible.
Okay.